This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Offshore bombshell. Leaked documents from Panama show how some of the world's power players use offshore accounts, and the fallout goes global. Product or profit? Should investors buy companies based on a hot product, or can hype get in the way? And baseball bonanza, how one man took his passion for America's pastime to a whole new level. All that and more on Nightly Business Report for Monday, April 4th. Good evening, everyone, and welcome. Tyler Matheson is on assignment this evening. Tonight, we begin with a story that continues to unfold and is having ripple effects in the uppermost echelons around the world. I'm talking about what some are calling an unprecedented leak of more than 11 million documents from one of the biggest offshore law firms, which shows how some of the richest and most powerful people in the world use tax havens to their advantage. No Americans have been named so far, but one trail indirectly seems to lead to Russian President Vladimir Putin. Some others mentioned include the prime ministers of Iceland and Pakistan, the president of Ukraine. One of the biggest revelations shows how some created shell companies and made secretive investments. Well, that's some of what we know, but there's still a lot more we don't. And for that, we turn to Eamon Javers in Washington. Good evening, Eamon. Good to see you. First off, these structures are not necessarily illegal. Is that correct?
Yeah, that's right, Sue. Under U.S. law anyway, and remember, we're dealing with people all around the world, but under U.S. law, it's not necessarily illegal to have an offshore shell company. It's just that you have to disclose the assets that are in that offshore shell company when it comes time to pay your taxes. And presumably, a lot of the people who set up these shell accounts did it exactly to avoid paying taxes, but you have to go on a case-by-case basis to determine that.
Yeah, why no Americans on the list, at least so far?
Yeah, that's one of the great mysteries here. One of the things that we don't know is why haven't we seen very many American names coming forward just yet? It looks like there's a big global trove of documents here detailing allegations against people all around the world. Just one American name that I've seen so far in all of this, and that person is not a household figure, household name at all. So we don't know why not, but it is a big question here.
And why this particular firm?
Another great unanswered question. It looks like the leaker in this case had access to these documents. It's more than 11 million documents. It's billing records, it's emails, it's spreadsheets. It's all the kind of daily work product that you would have in an office where you're putting together shell companies. And a lot of that is very revealing because the only public way to know who owns all these, or the only way at all to know who owns a lot of these structures, is to look inside the law firm where they're actually documenting who they know are the real owners, even as they're putting together a document trail that suggests that somebody else actually owns this shell company.
Do we have any idea who had that kind of access and therefore could have leaked the documents?
And that is the third big mystery in this tonight. This story just broke internationally yesterday. So much speculation now swirling around just who was the person who leaked all this information. Who was that person, and why did they do it? We don't have any indication right now, but it seems clear that there is a financial Edward Snowden out there, to coin a term, and we don't know who that person is. Was it a hacker who hacked into this law firm? Was it a disgruntled insider who had access to it? Was it part of some other soap operatic political shenanigans on the geopolitical front? We have no idea, but you can imagine that a whole lot of people around the world want to know the answer to that question.
And where did they release the documentation to, or to whom?
Yeah, they gave the information about a year ago to a German newspaper, and then that newspaper shared it with a consortium of investigative journalists around the world. Those folks have been working on this story for months and months, digging into these documents. The rest of the world just found out about it yesterday.
Wow. Eamon, thank you so much.
You bet.
Eamon Javers in Washington. And we mentioned the creation of those shell companies. So what are they and how do they work? Dina Gosofsky explains.
Offshore accounts and shell companies have long been used by wealthy individuals, government entities, and large corporations. But the recent leak of a trove of documents from Panamanian law firm Mossack Fonseca, known as the Panama Papers, shows how it works in much more detail. and who's benefiting from having so much money overseas.
Creating an anonymous company is very, very easy. If I, as an American, really wanted to create an anonymous company in Panama, I would call up what we call a corporate service provider, and Mossack Fonseca is a version of a corporate service provider. In many cases, you'll see companies like Mossack Fonseca doing what they can to make it as difficult as possible to figure out who is behind an anonymous company. And so that makes a bank's job that much harder.
Oftentimes, one can even register an anonymous company online. There can also be what's referred to as a registered agent involved. That's the person who would receive all the mail for the company. For example, if there's some kind of legal action taken against it, that person would notify the appropriate parties.
I can then use that company for any number of things. I can use it to stash my kickbacks in a bribery scheme, whether that's commercial or official sort of government corruption. I can use it for tax evasion or tax avoidance.
Moving drug money can be done this way as well, by sending cash through tax havens to make it harder to trace the source of the funds. For some government officials, there's no shortage of reasons to try to hide money.
Sources we spoke with say a lot of people here in America take our banking system for granted. And in places where money is not safe, like in politically unstable countries, the incentive to park money overseas becomes that much more real and urgent. Some world leaders simply don't want the public to know how much they're really worth. And of course, if they can get away with not filing a tax return, that makes Panama all the more enticing.
And some think, based on the close relationship between the United States and Panama, American names and companies might come under the spotlight next.
Those ties have been very strong for a long time, and I do expect to see U.S. names and, in fact, U.S. anonymous companies part of the network and fabric.
In Panama, the customer is oftentimes shrouded in mystery, just like he or she prefers. For Nightly Business Report, I'm Dina Gosofsky.
Billions of dollars from offshore accounts eventually make it back here to the U.S. And as Robert Frank explains, much of that money goes into what's called hard assets.
The world's rich and powerful have stashed trillions of dollars offshore, and some of that money has washed up in the Miami real estate market and in the global art market. The leak of the so-called Panama Papers reveals the offshore structures linked to the Mossack Fonseca law firm, detailing the shell companies used by dozens of world leaders and billionaires. Press reports say 29 billionaires on the Forbes list used offshore structures involving Mossack Fonseca. Now, very few of these billionaires are named, but Forbes says many appear to be from Russia and Eastern Europe. Arkady Rotenberg, the childhood friend of Vladimir Putin, is named, as well as Ukrainian President Petro Poroshenko. No American billionaires or clients have been named in the document leak, at least not yet. But U.S. assets have become a favorite destination for some of that money. The Miami Herald reporting that 19 foreign nationals created offshore entities that purchased Miami real estate, and 8 of them have been linked to corruption, tax evasion, or embezzlement in their home states. Half of all real estate purchases in Miami are cash deals, and overseas buyers bought $6 billion worth of homes in southern Florida last year. That's about a third of local spending. The U.S. Treasury has imposed new rules in Miami and Manhattan requiring buyers using LLCs and offshore entities to disclose the real owners. Now, offshoring is perfectly legal in many cases, but it has helped support the art market. Reports say Russian billionaire Dmitry Rybolovlev created trusts in the BVI to purchase more than $2 billion worth of art, including a famous Modigliani he bought for $118 million. That was sold by billionaire Steve Cohen. These trusts were already disclosed last year, and they were created for estate planning purposes, but it shows that growing scrutiny of offshoring could lead to calls for more regulation and add further pressure on both the art and the real estate markets. For Nightly Business Report, I'm Robert Frank.
Stocks started the week on a down note as a 3% slide in oil prices offset gains in the healthcare stocks. The Dow dropping 55 points to 17,737. The Nasdaq falling 22 points, and the S&P 500 was off 6. New orders for factory goods fell in February, with business spending much weaker than originally thought. The Commerce Department said orders fell 1.7%. Orders have fallen 14 out of the last 19 months. Manufacturing accounts for about 12% of the U.S. economy. Boston Federal Reserve President Eric Rosengren says that the markets have it all wrong. He said the markets are too slow in pricing in interest rate hikes and a rise might be better suited earlier, saying, quote, "I believe it will likely be appropriate to resume the path of gradual tightening sooner than it is implied by financial market futures." As of last Friday, the first month priced in with a better than 50% chance of a rate hike is September. So how do Americans feel about the prospects for the economy and for investing? And how do they feel about the impact the presidential frontrunners might have on both? Steve Leisman gets some answers about their sentiment with the results of an exclusive poll.
Americans head into the heart of the election season with mixed views on the economy. The CNBC All-America Economic Survey finds above-average attitudes on the current state of the economy, but below-average views on where things are headed. Opinions on whether wages and home values will increase in the next 12 months are also in line with the past, at about a third of the public. But only 31% think this is a good time to invest in stocks. Meanwhile, most national polls show Democratic frontrunner Hillary Clinton beating Republican leader Donald Trump in a head-to-head contest. But the CNBC survey tells a different story. When asked who is best for the economy, for your wages or your personal financial situation, Clinton and Trump are tied. In the poll of 802 Americans across the country, with a 3.5% margin of error, 24% say Clinton and 24% say Trump have the best policies for the overall economy. 21% say none of the above.
There's no clear advantage for either one of these two leading contenders going into the general election. So a lot of it's going to be fought at the margins where they do have their advantages.
Clinton shows stronger support on health care, the middle class, and trade, while the two are tied on immigration. Trump has an edge on having the best policies for large corporations, the wealthy, and regulating business, banks, and Wall Street. One Trump advantage, the electorate is angry, and the angry vote breaks for the Republican frontrunner. Nearly 3/4 of the public is angry or dissatisfied with the political system in Washington, compared with 56% who are angry or dissatisfied about the economy.
The economic anger that's out there is very, very widespread. It's across both parties. And I think more than any other survey we've done, we're seeing those that economic anger and that economic feeling being influenced and pushed and driven by partisanship, and also in another way by the economic haves and have-nots.
The angry and dissatisfied favor Trump on the economy over Clinton, 28 to 21%. Trump appears to have had a profound impact on American attitudes on trade. Just 27% of the public say trade helps the U.S., down 10 points from when the question was asked a year ago. 43% say it's hurt the country, up 12 points. But more than half the public say immigrants strengthen the nation, little change from August 2015. And only 31% say immigrants are a burden because they take American jobs and housing, down 7 points. A sign perhaps that a nation of immigrants hasn't forgotten where it came from. For Nightly Business Report, I'm Steve Leisman.
And Donald Trump is weighing in on where he thinks the economy is heading, and it's not good. In an interview with the Washington Post, Trump said we are on the verge of a, quote, very massive recession, end quote, thanks to high unemployment, a frothy stock market, and what he calls an economic bubble. His comments were met with skepticism from economists questioning his math. For example, Trump put real unemployment at around 20%. The broadest government measure of unemployment currently sits at about 10%. Still ahead, how the government is trying to make shopping for your broadband connection as easy as reading a cereal box. We'll explain coming up next. A federal judge granted final approval for an estimated $20 billion settlement over the 2010 BP Horizon oil spill in the Gulf of Mexico. That settlement was originally announced last summer. It will be paid to 5 Gulf states over 16 years for environmental damages. The rig explosion killed 11 people and spilled more than 130 million gallons of oil. The Federal Communications Commission wants to make it easier for customers to comparison shop for broadband service. Julia Borston takes a look at the new rules the Commission launched today.
The Federal Communications Commission is breaking down the fine print of broadband service, turning confusing jargon into what looks awfully familiar, taking a page from the nutrition label you'd find on a cereal box to help consumers compare broadband speeds, data caps, promotional rates, fees, and surcharges. Until now, users had to call internet service providers to get much of that information.
Hidden fees have no place to hide. They're all laid out there. The surprise of when you open your first bill and you say, oh, that wasn't what I was expecting, won't happen anymore because everything is laid out.
These changes are part of the FCC's open internet order signed last year requiring transparency. And the stakes are high, with the average monthly cost of broadband ranging between $60 and $70, and the actual prices paid for broadband services as much as 40% greater than what's advertised after taxes and fees. This according to consumer complaints to the commission.
That means today's changes are a win for consumers as well as the internet providers who offer the best deals. Analyst Michael Harrigan points to the nation's biggest internet provider, Comcast.
I think that anything that gets standardization and clarity to the consumers is a win for Comcast and probably for a number of the other cable companies that have such a similar product set to what Comcast offers.
And with streaming video on the rise, thanks to the explosion of services from Netflix to YouTube, the focus on efficient broadband will only continue to grow. So though this precise format isn't mandatory, we can expect it to be quickly adopted throughout the industry. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And a quick note, Comcast is the parent company of CNBC, which produces Nightly Business Report. Alaska Air Group buys Virgin America for more than $2.5 billion. That's where we begin tonight's Market Focus. The proposed merger between the parent company of Alaska Airlines and Virgin America will still need to be approved by regulators. But earlier today, Virgin America CEO David Cush said what made Alaska the clear choice over other airline bidder JetBlue.
I will say price was the primary thing here, that we understand what our fiduciary duty is. They were both qualified buyers, so ultimately it came down to price. We thought the Alaska plan was a very good plan. It was about establishing a powerhouse on the West Coast that would have strong presences in Seattle, San Francisco, and LA, so we liked that. And very simply, they came in with a very strong offer.
Shares of Virgin America soared more than 41% to $55.11. Alaska Air fell nearly 4% to $78.92. JetBlue shares also down 4% to $20.41. Investment research firm Sanford Bernstein downgraded General Electric on concerns over valuation and risks of rising competition for several of the company's businesses. But Bernstein increased its price target on the stock to $34 a share, up from $33. Shares fell 2% to $31.23. Network service provider Brocade Communications will buy Ruckus Wireless in a stock and cash deal valued at about $1.2 billion. Ruckus Wireless creates wireless internet systems. Shares of Brocade fell more than 13.5% to $9.19, while shares of Ruckus spiked more than 32% to finish at $13.24. Yahoo attracts more bidders. Media company Time Inc. is reportedly exploring the possibility of partnering with a private equity firm to bid on the tech giant's core internet business. Yahoo is also reported to be in talks with the Japanese company SoftBank about a potential sale. SoftBank currently owns a part of Yahoo Japan and Alibaba. Shares of Yahoo up more than 1% to $37.02. And Tesla orders for its new model are still rolling in. CEO Elon Musk tweeted over the weekend that the company has received 276,000 pre-orders for its new Model 3. The car isn't expected to hit showrooms until the end of 2017. But after the bell, the company said in the first quarter it delivered fewer cars than expected because of a parts shortage. That initially sent shares lower in extended trading after closing up 4% to $246.99. Well, whether it's the newly unveiled Tesla Model 3 or the latest must-have tech gadget, investors are buying these hot new products instead of the stock. But is this the best way to invest their money? Mike Holland, chairman of his own money management firm Holland & Company, joins us now to talk about that. Good to see you again, Mike.
Good to see you, Sue.
What do you think about that? I mean, you get a hot new product, but that doesn't necessarily translate into good stock market performance, does it?
No, and actually it often ends in tears because with companies who have a single really hot product. It's usually not a secret. It's usually part of it is marketing. Elon Musk is a great marketer. The stock over the last several years has done spectacularly. It's up 65% from its bottom earlier in the last 12 months. In buying stocks in companies like that, you have a huge amount of enthusiasm, which means that the valuation probably reflects that. In the case, the Tesla stock, as you point out, hasn't done all that well over the last several months, but its valuation, Sue, is something they lose money. They don't make money. So how do you value companies that don't make money? So often with new companies and companies that have a hot product, it's tough to value them. When they actually start earning money, people realize what they've been paying for the stock. It's actually quite difficult to make money in those companies. Now, every once in a while, an Apple comes along.
I was just going to say, what about Apple?
We all remember Forrest Gump, and there's no question that it happens every once, but it is a lottery. So it's not the way Warren Buffett invests or John Templeton and the classic investors who made lots of money over the years. It's fun to do. I've smart friends who own Tesla stock and Tesla cars. I think they're probably going to get more enjoyment out of the cars than the stock.
Is Apple an exception to that rule because of Steve Jobs' vision for the future? I mean, does it have anything to, and you know, Elon Musk has some of that as well. How much of it has to do with a visionary at the head of a company like a Tesla or like an Apple?
At least 100%.
Okay.
and there's no question that the person at the top in those situations is the do or die for the company as well as for the investor. There's you look back at the history of Apple versus all of the other companies from the dot-com bust on through, and so few of them had anyone like, because these people come along once in a generation. Musk is a wonderful marketer. He looks to be a pretty good CEO. He looks to be a pretty good visionary, as you said, and maybe a good engineer. He's done a lot of interesting things. So it's possible that several years from now, that will be one of the extraordinary, unusual events, the anomaly in this situation.
Right.
Quite often, single hot product companies are not a great place to be.
On that note, Mike, thank you so much, as always. We appreciate it. Mike Holland with Holland & Company. Late this afternoon, the Machinists Union, representing 30,000 workers at United, said it has reached 7 tentative deals with the airline. The 5-year deals call for a 30% pay increase over the term of the contract and a 25% hike in pension benefits. Coming up, how one man turned his love for baseball into a veritable fortune. Here's a look at what to watch for tomorrow. Trade numbers are expected to show the nation's trade deficit widened last month. We get a read on the biggest part of the economy, the services sector. It's expected that segment expanded slightly last month. And we get a snapshot of the labor market as the so-called JOLTS monthly report comes out. This one will show how many job openings there were in February, how many were filled, and how many people quit. And that's what to watch for on Tuesday. While basketball fans will be zoned in on tonight's NCAA Men's Championship, baseball fans have a lot to be happy about, too. 3 games kicked off the Major League Baseball season yesterday, but the rest of the teams kick things off today in earnest. Baseball and memorabilia go hand in hand, of course. And as Robert Frank tells us, one man turned his hobby into treasure.
This briefcase isn't particularly fancy, but don't be fooled by appearances, because it's holding a rare investment worth millions. We'll take a peek inside soon, but first, a little background on the white glove multimillionaire construction mogul who's carrying it. Jim Ansell is also a huge baseball fan with a big league addiction.
I buy expensive items, but I just buy them just to collect them.
And sometimes just to wear them. With his fiancée watching, Jim is casually sporting a rare 100-year-old baseball uniform. The hat alone is worth around $200,000 because it was once owned by legendary slugger Babe Ruth.
So cute, hon.
It's taken Jim decades to collect thousands of very valuable pieces of sports history.
I really have no idea how much money I've spent.
But this is just some of what he spent it on. He paid around $50,000 for a nearly 100-year-old baseball signed by Hall of Famer Christy Mathewson. It's now valued at $250,000. 15 years ago, he spent $65,000 on this Babe Ruth baseball bat. The rare wood was notched by the Bambino himself. One for each of the 8 home runs he hit with it. Price tag today, around $1.5 million. But of all the purchases Jim's ever made, the one he's most proud of is hidden in this handcrafted wooden briefcase. And memorabilia expert Dave Hunt is here to tell him what it's worth. Inside the case, a collection of 19 balls dating back to the early 1900s, all signed by presidents.
Theodore Roosevelt? You know, that's impossible.
From Teddy Roosevelt to Barack Obama, not one chief executive is missing. It took Jim 20 years to hunt down each autographed ball. Harding's cost him $50K. JFK's cost about $18,000. Obama's he got for free as a gift. All in, Jim spent around $200,000 on the balls.
This is literally breathtaking.
Dave estimates the ultimate commander-in-chief collection could be worth between $1 and $2 million. And he puts the value of all the memorabilia Jim's amassed at around $20 million. Jim has no plans to part with any of his collection. In fact, he's only expecting his children to cash in once he's gone.
My goal is, when I pass away, to have an auction for my 7 children.
An auction that'll keep Team Ansell living in style for generations to come.
For a nightly business report, I'm Robert Frank.
And that does it for us tonight. I'm Sue Herrera. Thanks so much for joining us. Have a great evening. We'll see you tomorrow.